Okay, bro, today you will finally learn how to draw equilibrium correctly so that you don't mess up your trades anymore, because the current struggle that you might have right now is that you don't know exactly how to draw equilibrium, and then you misdraw it, and then you have losing trades, and then you are frustrated, and then you lose even more money. Okay, so today we are going to stop that. We are going to see how to draw equilibrium correctly so that you can have nice trades. Okay, basically what equilibrium is the middle point when we have a trend shift. For example, here we have a bearish trend. So what do we need to do in order for us to be able to draw an equilibrium is to wait for liquidity sweep, which we have right now here. Then what are we waiting for? We are waiting for break of structure, which we have right now here. And then we have that particular low over here, and we connect it with that particular high, and the middle point is equilibrium. It's that simple. Okay, so once we have liquidity sweep and break of structure, then we connect the low with the high, and that's basically equilibrium. And then the price, what will it do? It comes into below 0.5 on equilibrium, it continues higher and higher and higher and higher and higher, and then we have the same structure also for from bullish to the bearish trend. Basically what we do is we go higher, we have again liquidity sweep, then we close lower. What do we have here? Break of structure. Okay, so now we created this high over here. Okay, so this is a high, and we created this low over here. So what do we do then? The middle point is equilibrium. So what do we do? The price then comes into, so above 0.5 on equilibrium, and continues lower and lower and lower and lower. Okay, so let me write that down. What do we need? We need liquidity sweep, we need break of structure, and then connect high with low. Okay, so that is all we need. Now let's go to the chart. We are on Australian dollar and Canadian dollar, okay, on a daily chart, and let's go together through a few examples of equilibrium. Okay, and the first one I already see here. What do we have over here? Well, let me zoom it. Wait, sorry, let me zoom. Okay, so we have liquidity sweep. Okay, where do we have break of structure? We have break of structure over here with these candles. Okay, and then we created this particular high over here. So over here is the high. So what do? I take this lowest point and I connect it to the most recent high that we created after break of structure, and this is basically our equilibrium. Okay, like this more or less. And you can see what happens. The price comes down, barely touches equilibrium, and explodes higher. Okay, and then what do we have again? Then the price touches equilibrium a couple of times and then continues higher and higher. Okay, so let's go now together through those couple of times. What do we have here? We have liquidity sweep. Okay, then over here with this candle, you see that white candle, we have break of structure, so we connect it from the low to the most recent high that we created. Okay, and look what happened afterwards. The price comes lower and stops us out. And now you are saying, Yasha, this strategy doesn't work. Of course, it doesn't work 100% of the times. Okay, so whoever tells you that strategy is working 100% of the times is lying to you. Okay, and I'm not ashamed to admit that sometimes you lose money. It's completely normal. Okay, so then the price indeed continues higher. Okay, so what can we do? We can take a look at this example. We have a liquidity sweep over here. Where do we have break of structure? With this white candle. And then over here, you see over here, we created a high. So what do? We connect it from the low to the high. and you notice something very interesting, that the price didn't come lower, it didn't come below equilibrium, but instead continued higher and higher and higher. So what do we do in that case? In that case, brother, we move the equilibrium until we see that the price touches it. You see over here it's a new high, okay, it's a new high, and we still haven't touched it. Then we create a new high over here, a new high, like this, still not touched. We create a new one, still not touched. We create a new one, and what happened in that case? The price comes then lower, sweeps all of those lows over here. You see it sweeps liquidity, okay, touches 0.5 on equilibrium, and then continues higher and higher and higher, okay? So that's how it is. Then what do we have in that case? Wait, let me delete everything. What do we have in that case? We have liquidity sweep, okay? You see with this move higher, we have liquidity sweep. Then where do we break structure? We break structure with this black candle over here, okay? So what do? We drag equilibrium from here, from the high to this particular low that we created over here. You see, this is a low. Then what does the price do? Let me delete that. The price comes to 0.5, okay? It comes above 0.5 for a slight little move, okay? So that means we are now in premium zone, because this zone above 0.5 is considered premium and the one below is considered discounted, okay? So whenever we are shorting, we want to target premium zone, okay? We want to short in premium zone because that means that the stocks or the shares of one particular asset are more expensive, which means we will have bigger profit to go lower, okay? So that's the thing. So what does the price do? You see here, it wicks through 0.5, it touches equilibrium and then collapses, okay? Literally collapses. So what do we have then over here? We have liquidity sweep, okay? You can see quite beautiful liquidity sweep, okay? Where do we break structure? We break structure here with this white candle, okay? So here we created one low, and then the next high that we created after break of structure is over here, okay? You see those two candles. So what do? We take the equilibrium, we connect the low over here, okay, the high, and then you can see the price comes lower and creates a new high, okay? So we drag equilibrium over here, and then what happens is then the price comes into premium zone, okay, below 0.5 on equilibrium, which means that the shares of Australian dollar, Canadian dollar are over here are cheaper to buy because the price is lower in comparison to the price over here on the top, okay? So the price over here is lower, we are in discounted zone, so we can start buying shares over here and target those highs, okay? And then you can see that the price indeed went higher and higher and higher, okay? So the whole point of equilibrium is basically to determine where are our entries better in terms of the price, okay? Because you don't want to enter, wait, let me draw that for you. You don't want to enter, what the fuck? You don't want to enter over here because over here it's gonna be expensive. You rather enter over here, and then all of this difference is additional profit for you, okay? That's additional profit. So that's the whole point of equilibrium, all right? It's basically to determine where it's our better entry, okay? So at this point, I also want to invite you to join my Discord server. It's completely for free. I'm not selling anything, all right? It's for traders, basically it's meant to be for beginner traders so that we can learn from each other something new. We can discuss ideas. You can see over here I have a daily bias. Then over here I have trading breakdowns, you know, when I do my trades. Then we also have self-improvement, because our mission is to become better traders and stronger men. So if you like this type of content, okay, then thank you for supporting me by subscribing to my channel. Thank you for that, bro. Do the hard work and see you on top of the world.